Good morning again. Welcome to our opening panel. I'm very pleased to welcome Sam Baker to the stage, who will be the moderator of this panel, and Sam will, of course, introduce his panel members. Sam is putting his around 30 years of consulting experience to use, helping the system and specifically business to transition to a more sustainable future. Sam's a chair of a small charity, Change Drivers, and he's a strategic advisor to Business Declares, as well as being a climate fresk facilitator. Now, many of us in the PMI, we already know Sam. He's worked with us on a number of climate-related initiatives, including facilitating a number of climate fresk workshops across the European chapters, contributing to PMI chapter events, and of course, he's with us today for this event. And I'm going to put in here a quick plug for a session that Sam and I will be running together at the end of the month on the 29th of November on projectmanagement.com, where we're going to be running a global webinar together on the theme of climate and climate fresk. So please come and join us on that session. But anyway, I'll hand over now to Sam, who will introduce the panel.
Okay, thank you, Stuart. Thank you so much. Yeah, some really fantastic talks already. So I listened to the end of Simon's. I listened to, I sort of saw Lucilla's notes flashing up on the screen, and also Mark and Esther talking there. So lots of really, really important points already. And hopefully we'll build on that in this session. So this session is all about climate change and business. Clearly the summit itself is about the broader set of SDGs. But I think we've chosen climate change because I think it represents an existential crisis. I mean, Simon has touched on some of that, but not only that, but I think in 2015, the UN participating countries, so pretty much the entire world came together with hope to address climate change. The expectation or the plan was to limit warming to 1.5 degrees to 2 degrees, or strive for 1.5 degrees, which meant halving emissions to 2030. Since then, we've seen a bit of progress, but unfortunately no progress in net terms against emissions. Emissions continue to rise. So I think now we're at a juncture where we have a group of countries and companies who are ignoring current climate change and continuing and in fact growing and expanding their activities to the detriment of the planet and the people on it. And then we have another group of people and countries and companies who are working hard to try and address this. So I think we're at a critical juncture, which is why I think climate change is so important. Of course, it is interdependent with all the SDGs, both on the progress against those SDGs, and the SDGs require climate change to be addressed in order to make progress themselves. And then we've chosen business. I mean, it was interesting that Simon emphasized you all as consumers. We have chosen business. We think, I mean, it's pretty obvious, but business is a critical component of our system and the way we've constructed it globally. Business activity is 75% of OECD GDP in its entirety. Business is, or big business anyway, is global, is international, it's influential in so many ways in our lives. And just in terms of sort of size, we think about the top three companies are typically Saudi Aramco, Microsoft, and Apple, and it sort of tends to change depending on the day or the hour. But those companies are approximately, any one of those companies is in order of magnitude is about 1.5 times the economy, the entire economy of Russia or Canada. So absolutely enormous, huge influence companies. The private sector writ large, the business sector writ large is very, very important. Now, back in 2021, we had the Conference of the Parties, so the big UN climate change event happened in November in Glasgow. And at that time, in the run up to it, I led a project which interviewed 450 companies on their climate narrative. And at the end of that exercise, we stepped back and it was exciting. We heard commitment, we heard ambitious plans. Now, there wasn't a huge amount of progress against those plans on the ground, but there was a lot of ambition and planning and strategy and hiring and all sorts of other things. And so it felt like progress was being made. Now, if we roll forward 2 years, then the way that we can inspect the progress of business has been tightened up. So there was something called Race to Zero. There still is. So that's under the sort of the UN. So Race to Zero asks companies then and cities to create net zero targets in line with the Paris Agreement. So typically it's net zero by 2050 or before. And I know that Simon touched on net zero. So So one is the Race to Zero, but together with the Science Based Target Initiative, and together, importantly, with a new body convened by the UN, which is called the High Level Expert Group on Net Zero, or something like that, HLENG. And so together, they've tightened up what it means to be making progress in line with the Paris Agreement for companies and large organizations. It's super important. Now, the latest analysis of those sort of conditions show that of the Forbes Global 2000, so the biggest 2,000 businesses in the world, of them, 50% have a target which is broadly applicable or in line with the Paris Agreement and given a tick by that UN body, 50%. Now, that constitutes an enormous step forward from where we were 2 years ago. It constitutes, or it implies, a huge amount of effort and thinking and resourcing of those companies, by those companies, of course. But what it also says, of course, is that 50% of companies don't have a target which is suitable, validated, ticked off. And not only that, but 33% of the 2,000 have no plans to limit their emissions. And just 4% of the entire 2,000 have not just plans, but plans, interim plans, short-term action plans, evidence of that action, which is called the sort of the starting line expectation of that expert group. So whilst the targets are being signed off for half of them, only 4% really seem to be enacting that. Now, the urgency of business stepping up was reinforced today by a report that came out from the UN. You might have seen it. And that UN, so in the run up to this year's COP, which is in three weeks' time, there is what's called a stock take, so an assessment of how everybody's doing against what they said they were going to do, and indeed against the Paris Agreement. So there has been a new UN report come out, and notwithstanding, so the national commitments, if the national commitments are enacted, I think we're expected to get to about 2.5 to 2.7 of warming above pre-industrial levels. However, when they inspect the plans, the very direct plans around the exploitation of fossil fuels, I think 4 countries, something like, so I think it's India, Saudi, Russia, and the US, together would mean that we would blow that target of 1.5 degrees by 2 times. So what is being put on the paper by governments, for instance, what is being then translated into licenses, and we've seen that in this country, in the UK, into licenses, which will then be exploited and delivered by business, does not match what we need for a safe and secure future. And if anything, that is absolutely cataclysmic if we overshoot by 2 times the Paris Agreement. So today, we don't expect this is all doom and gloom. We do expect to be talking about some of the positive things that business are doing. And so the broad format of this, I've got 4 outstanding panelists. So we're going to hear from each of those panelists in turn, and we're going to hear their perspective. We're then going to get a chance to ask questions. So do add questions as they come. I'm going to keep my eye on the question box, and I'm going to see that go as I'm going to read those as we go, so I'll get a chance to ask them your questions. I will also ask questions, and the panelists will ask each other questions. What we'll then do is move on from that to have a plenary discussion, which asks how can we scale up radically? Because whatever we're doing in business, all those good examples, we need to scale up massively to have a transformative impact to make sure that the concerns that I've raised aren't really manifest. And then we're going to end up by talking about this year's COP and saying sort of, is it important? And it is important to business, and what might we expect? So that's what we're going to address and talk about. Please do engage. Please ask questions, and we'll feed them in. And then to my 4 panelists, so carefully chosen, each with a very different perspective. So we're going to start with Chris Caldwell. So Chris Caldwell was at London Business School, which is how we originally met. But he is now the CEO of Renewables organization, which brings together consortia for renewables deals. He's a green investor. We then have Matt Sparks, who's on the legal side. So he's the head of sustainability for Linklaters. So welcome, Matt. we have Kate Sandel. So Kate Sandel works in the finance sector at the moment, but has a long history of working with B Corp and B Labs. So fully up to speed with business and business's contribution more broadly. And then we have Aidan Bell, who works in the built sector, who is the founding member of an organization which seeks to create a greener built sector. And it's crucially important. All of those sectors are important. So what we hope to do is hear from each one of you, get some questions, get those perspectives, and come out, I really hope, invigorated and enthusiastic for what business is going to do to address the challenges we face. So with that, Chris, if I can hand over to you as our number one speaker.
Okay, well, thank you so much for a fantastic introduction, Sam. That really was kind of inspirational. I need to try and match your energy there. With such an esteemed panel, like it's a great honor to be able to kick things off here. Now, as you say, I'm here speaking on behalf of the renewable energy industry in general, like as an entrepreneur and CEO, clean tech investor in the field. Renewables are right at home here on the PMI, because executing on big projects is really our bread and butter. So our recent experience will be pretty familiar to most of the listeners here. We have challenges of tighter financing, shifting planning landscapes, supply chain snarl-ups, and so on and so forth. You'll all know all this stuff. However, when it comes to climate, renewable energy is fundamentally different, because while many sectors around the world are coming to terms with the realities of climate change at last, as Sam rightly points out, they're doing it by retrofitting industry norms for new worlds. So sometimes it's additive, like it's the green bolt-on. Sometimes it's subtractive, like getting rid of old unsustainable practices. But for us in the renewable sector, by contrast, sustainability isn't a new concept. It's our entire reason for being. Now, our biggest challenge isn't kind of repurposing and retooling. Our biggest challenge is simply we need to do more, much more, and we need to do it quicker. We need to grow green energy as fast as we possibly can. But for all the outstanding progress we've made this century, the reality is we're still really far behind where we need to be. So to ask the question, what exactly the state of play for 2023, and what do we do from here? Like as Sam correctly says, it is really important to start by recognizing the positives of the industry today. In the words of the International Energy Agency, the IEA, the path to 1.5 degrees may have narrowed as emissions keep on rising. But to quote them, the staggering progress in clean energy growth is keeping that path open. So it is possible. Now, the headlines in 2023 is that we set another record for financing and deploying of clean energy. So that's also really good stuff. Solar was a standout star, with deployment up by 50% in the past 2 years alone. And 2023 marked another really big, exciting watershed where solar investment overtook oil investment for the first time. Again, magnificent stuff. Now, the private sector successes are tied in with policy level promotions too, like the Inflation Reduction Act in the US. Obviously a really great example. $369 billion in investment and incentives is a big, shot in the arm for the sector over there. And that should be attracting significantly more private capital to come in to match those government incentives. Now, just as important as the cash that's being put in by the government, it is the message that it sends. The US is now open for business, and it's become a magnet for green business with the introduction of long-term tax credits, hopefully bringing the kind of the boom and bust cycle over there to an end. Closer to home, the EU is making strides too. The border adjustment scheme is a game changer, and we're already seeing that drive demand for European clean energy. Like look at the pipeline for steel projects, green steel projects, for instance, and there's plenty more examples. But just as important in the EU, the subtle regulatory changes that are being made on the supply side, something that the UK does really need to try and get its head around. In many EU member states, it can take up to like 8 or 9 years to get planning permission through. Now, that's clearly way too long, but new European enabling legislation has said that these things can be sped up, ramped up by defining wind and solar projects as projects of overriding public interest. So in a few years' time, that stuff will hit the grids, and again, more progress will be made. So we're all good, right? Well, no, we're not. There's 2023 has brought some very, very serious headwinds to the industry, like as mentioned before, and like as everyone here will recognize, we're struggling with higher interest rates. Commodity prices remain volatile, and supply chains are kinked and congested. Also, in the renewables sector itself, it's going through its own secular changes. While solar is booming, onshore wind is slowing down, and offshore wind has died a death. We can talk about that later if you like. But there's some serious issues with that very important sector that does really need to be picking up the pace again. There's also the global trade landscape. Geopolitics and industrial competition are increasing the risk of trade conflicts breaking out. That creates ambiguity and uncertainty. So, for example, it's good and bad. China has emerged as the undisputed leader in global renewables development and the world's preeminent and cheapest solar manufacturing hub, who also produce a pretty good wind turbine. Now, is that a cause for celebration? Yeah, of course. Like, we should all cheer a major emitter cleaning up their act. But is it a cause for concern? Yeah. It certainly is too. Ukraine has been a warning against over-reliance on politically tricky suppliers. Like, could Europe's next energy crisis start in the South China Sea? Well, possibly. Of course it could. So how can private industry navigate these headwinds? The short answer is we need to get more creative. Now, that takes many forms. We need more innovation, and we need to be bolder to tackle the harder challenges, working across industry lines on problems like green steel, green cements, these types of like big, hard to decarbonize sectors. Now, the risk with this is that well-meaning, well-intentioned efforts can become misdirected, because as the job gets tougher, there's a temptation to reach for a silver bullet. Like, there's a lot of debate and hopium, honestly, around things like green hydrogen or direct air capture, space mirrors, and other creative solutions. Some may say, like, let 100 flowers bloom, but we don't have time to waste on projects that are likely to be dead ends. Instead, we need to focus our creativity on meeting the proven needs with proven technologies. I should also say that green energy for the developing world is one of the biggest challenges that we're facing. There's a huge moral responsibility here, but there's also a big business opportunity. Now, the difference between the cost of capital in the global north and global south is narrowing quite significantly. Governments are calling for more investment, and institutions like the IMF and the World Bank, where I was over lucky enough to speak there last month in Morocco, are waking up to their role too. But despite the clear growth opportunity here, it's still difficult to break into developing markets. There's a big gap, and that's where policy needs to step in. Most of all, what we need to do is listen to what the Global South are telling us. I'm a huge fan of, for example, Maya Motley's, the Prime Minister of Barbados's Bridgetown initiative, which, if implemented, and there is some conversations going on about it now in the forthcoming COP, would entirely revolutionize the global financial system and unlock the next global wave of clean energy investment. So, without going on for too much longer, to sum up, we've come a long way, but there's an awful lot further to go. As Sam mentioned, we have to cut global emissions in half by 2030, and we're going the wrong way, and we've consistently been going the wrong way. The renewable energy industry is doing what we can, but macro headwinds are taking their toll. But on the other hand, I wouldn't be anywhere else because we're still outperforming the wider economy, and can feel like you're making a difference as in your day job, which is important. The secular trend is our friend. But unfortunately, we don't have the luxury of time. We need policy to be accelerating this progress. And what that really means is finding a greater collective will to be pushing on. Like, in the words of President Barack Obama, we're the first generation to feel the impact of climate change, and we're the last generation to be able to do something about it. So that's the real question. What are we going to do about it? Over to you, Sam.
Okay, very good. Thank you so much, Chris. So I've got a couple of questions, but Kate, Matt, or Aidan, any of you got a burning question? If not, I will ask mine. Okay, I don't see anybody. So the participants keep asking if you've got questions, and I'll keep an eye on that. So my two questions, if I may just sort of lump them together. So one is, they're completely different, by the way. So one is, we hear a lot about subsidies for fossil fuels. So, the renewables industry per se cannot grow and, cannot deliver on its promise if those subsidies exist. So what can the renewables industry at large / us all do about those subsidies, if indeed that's true? And the second thing is just a couple of reflections on the complexity of the projects that you deal with in renewables, because obviously we do have largely project and program managers in the audience. So just be very interested sort of as a quick perspective on the complexity of those projects.
Okay, yes, entirely different sound. Thank you. Okay, first off, yet fantastic point on subsidies. You may think that that renewables are inevitable. We're the cheapest form of energy. Our victory is going to happen because it's the right economic choice and the right moral choice. But that does entirely disregard the huge subsidies that the world is still using to prop up the fossil fuel sector. Like last year, they're worth 7 trillion, Sam. 7 trillion. That's 7% of global GDP. Now that should cause outrage. That is a total disgrace. Like imagine what we could do with a spare 7 trillion in our back pockets to go out, like throw in a proper carbon price, and we might actually be able to solve this problem. So what we need to be doing is for us as an industry, to be going and talking to our governments and saying this is not acceptable. We cannot continue to be propping up these industries. It needs to be repurposed to make the energy system of the future. With that 7 trillion globally, we could really start to be solving these things. So no, you're absolutely right. Now on the complexity side of things. All of these problems are every system that you need to build is a local system. So you need to be looking at the issues on the ground. The big so I'll give you a quick example. We're doing a project in Barbados, which hits massive hurricane zones, and there's an awful lot of risks attached to that. So what we've decided to do is, instead of having one centralized wind farm with, as we would traditionally know about it, and I think about it in the UK, we've got 10 individual little sites dotted around the place with single stick wind farms in there to try and prevent the risk, or reduce the risk of a hurricane coming in and knocking them over. We've got a new piece of technology which folds over the turbine and ties it up to the ground. So if a hurricane does come on in, you've got a better chance of it surviving. We've gone around through to kind of insurance brokers in the UK and put together a policy to allow for insurance to on this distributed site to be written, because there was no other way of getting insurance on these sites. We've also got ourselves in with local partners to be trying to put together all of the different planning permissions and find the different sites there. So the complexities of building a wind farm are quite well known, except when you take in the locals. Every different project that you're doing has very particular things you need to be thinking about, and you need to be very creative. You need to keep on asking the question of why not. You're told you cannot build wind farms in Barbados. Ask the question, why not? You're told, well, you can't insure. Okay, why not? Keep on working through the why nots until you get to the bottom line, and then you have a whole series of little problems you can be solving, and ultimately you can get things done. But it is complicated. It is interesting. It is. There's lots of challenges, but it is the most satisfying piece of work that you can be doing, because you can understand that is really making a material difference to the people that are around you, localizing power, reducing energy bills, increasing energy sustainability within their communities. It's a good feeling when you get it done.
Got it. Okay, Chris, thank you very much indeed for that. So we've got a couple of questions. We won't fire those to you, Chris, now. We'll go with Matt. But the first is Catherine talking about investment in green energy. So Kate, perhaps you could have a look at that. When it comes around to you, perhaps you could have a crack at answering that. And then Chris is just reminding us that there's a chunk of people in the audience, of course, who are public sector. I think, everything that we're talking about, the interplay between public and private sector is obviously absolutely critical. So let us, bear that in mind, obviously, as we talk through. Our sort of target focus here is on business, but of course, the interplay between public and private is critical. And many of the issues and the challenges we're talking about are also found in public sector organizations and big programs and projects. So with that, Matt, over to you, please.
Thank you, Sam. Hello, everybody. Very nice it is to be talking to a bunch of people who get stuff done, as opposed to a bunch of people who talk, which is no reference to COP, of course, so we may come back to that later. And please do ask lots of questions. I know we're not as cool as Simon is or was, but questions are great and really will challenge us and extend the conversation. So do please ask questions. So Matt Sparks, I look after sustainability at Linklaters, which is a global corporate law firm. My job there is to make sure that we are a responsible business, that our people can talk about us being responsible. So that's what we might call our own account activity. What I'm going to focus on today, then, more broadly, is the legal space, the landscape at the moment, at quite a high level. But for me, I need to practice what we preach. I need to make sure that our firm adheres, follows, and exceeds legislation, what we might call soft law, and best practice, so that our advice is credible. But that breadth and that view of the legal landscape, I think, is quite helpful for everybody, because that's where we're seeing an enormous pace of change. And I think particularly that's where the project management industry has a real role to play as we look much more towards accountability than we've ever done before. So a lot of this stuff, we want to do it because it's the right thing to do. We want to do it because it motivates people. All of us want to be doing the right thing, but increasingly we're going down a route that's mandating us to do these things. And as Sam highlighted in his introduction, that's probably a good thing, because at the moment there aren't enough businesses or organizations doing this voluntarily to make the impact that's required. It does mean those of us who've been active for a while are beginning to have to dance to different tunes, but I think that's a necessary step, a sort of necessary evil, if we are going to bring everyone along to achieve the changes that are needed. So some of you have been involved in projects before, and perhaps reporting and disclosure on sustainability issues, be that in the UK and various other places, on things like human slavery and modern rights and modern slavery and human rights, which has been a sort of narrative reporting to date in the UK, mandated for a number of years now, where we have to talk about how we're addressing those things, those issues as a business. And many of you will be familiar with SECA, which is the sort of carbon reporting legislation. That's much more focused on very absolute numbers. What reductions have you seen through in your own organization? So quite simple and straightforward. What we're seeing shifting now is that the legislation is moving towards a much more descriptive, strategic, and an in-depth exploration of what a business is doing. Let's talk about climate change, particularly around climate change. So some of you will be aware of TCFD legislation, which is essentially looking at climate-related financial risk. If you're above a certain turnover in the UK and to a degree have turnover elsewhere, above that 30 million threshold, you are expected to report on how climate change is impacting your business. How are you managing the risks and opportunities arising? And that must be disclosed in your annual report. That's quite a significant shift on from how you're reducing your carbon, because it's beginning to look at how climate change is influencing the behavior of your business, at least how you're taking it into consideration in risks and opportunities. What we're seeing beyond that is transition planning. That legislation is coming through now and will hit many organizations over the next couple of years. How is your business strategy, governance, metrics being shaped by climate change? So not just how are you beginning to factor these things in, but what are you actually doing differently? How will your business be different in 2030 or 2040 because of climate change? And of course, there's some scenario analysis there too, because we don't know exactly what direction things will take. So we're seeing a broadening of expectation, and actually much more intrusiveness, if you want to see it like that, or much more engagement, much more alignment with the business than we've ever seen before. And I think for this audience particularly, that means it breaks way beyond the sustainability team or sustainability group in any organization to the mainstream business. If you're involved or engaged in any program or project within a business, or indeed, as Sam says, a wider any equivalent organization, because your clients, your suppliers, whatever part of the value chain you sit in, you'll be hit by this. We are having to demonstrate how climate change is influencing our business, our plans, our strategy, and the same is true for any substantial sized organization, increasingly globally, because what we're seeing, not just in the UK, but certainly in Europe, is again a widening of the scope of legislation, CSRD, which is the Sustainability Directive. You see I fall over all of these acronyms. There's alphabet soup, as they call it, but there's a lot of it about. But a new directive on sustainability reporting in Europe is creating, some would say, 1,000 different data points now across a whole breadth of sustainability issues. So there is no shortage of things to keep an eye on, things to report on, and things to measure. But as I say, it's much more than just numbers now. It's about opening up the organization and talking about the strategy, talking about the governance of all of this, talking about the metrics of it all, and talking to a degree about the communication too. So there's an awful lot worry about. And I think this movement towards transparency, towards accountability, brings its own challenges. And one of the growth areas we're seeing as a firm, for better or for worse, is around particularly climate change, litigation, threat of litigation, and this idea of greenwashing. And again, coming back to the project management space, a key role for project managers here too, I think, because one of the fears that we have as a law firm in terms of our own behaviour and our own practice is that we will get it wrong. We will say we are doing something that we end up not doing, or we'll misreport, or we'll get the numbers wrong, whatever it may be. And this greenwashing threat, that we will undermine, compromise, and embarrass ourselves. We won't be credible. Yes, we're a legal advisor, so in a particular point, but whatever business you're in, your key stakeholders, and particularly activists, who we're seeing much more of, customers, other influential agents, are interested and will be looking for you to trip up. They will be challenging your organizations on, you say this, but are you getting it right? Either through your advertising, through your performance, whatever it may be. So more than ever, making sure that programs and projects and initiatives are run properly, thoroughly, robustly, that there are audit trails behind what is done, that there's paperwork, that every statement that's made, that every number that's generated has a trail of evidence behind it that you can point at and return to. Because the growth area in this space, beyond simply the reporting, is the following up and making sure that what you're saying is true. So I think the industry that you guys occupy is more important than ever. Legislation isn't going away. It's moving up and down in different jurisdictions, but the absolute trend is to draw more organizations in, to demand more of them, to widen the scope, to grow the amount of public disclosure, and I would say probably too, to encourage challenge of those disclosures, to make sure that we're all doing what we say we are doing. That broadly, I think, well, not I think, broadly, clearly, that's a very, very good thing. But it means for those of us in a sustainability space, but as importantly these days, anybody engaged in business, and particularly those engaged in moving business forward and business-related initiatives within organizations, it's absolutely key to get on top of this and to get it right. And as I say, I think this audience has a particularly critical role to play.
Brilliant. So thank you so much for that, Matt. I mean, that was full of hope as far as I'm concerned. We will go straight to Kate, but please, I'll ask a question that you can answer when we talk about scaling, which is, it's great that this is being, basically legal is forcing this into the heart of a business. That's fantastic. And we've seen these high profile cases against the British government, if I'm right, about sort of whether or not they're up to speed on net zero. We've also seen it against Shell, but I guess my question for scaling later is, how do we make those threats real and sufficiently voluminous that indeed it becomes a massive threat and then people start sort of changing very rapidly? So please park that. Please keep an eye on comments in case we get questions for Matt through that. But with that, Kate, perhaps we can pass over to you.
Yeah, thank you, Sam. Just reflecting on that, I think some of the things I was going to talk about were going to be about regulation, and I think they're fundamental from a finance perspective. Highly regulated industry, and that's how you shift. But I thought what might be interesting is just to talk a little bit through the journey that I've been on and why I work in the sector I do now. So I joined B-Lab, which is the organisation behind the B Corp movement, which is trying to change the economic system. Now, you might know it's a certification body of lovely, wonderful businesses, or not so wonderful businesses, that launched in 2015, which is when I joined. And the belief behind the B Corp movement is that capitalism is good, but the operating system, this concept of shareholder primacy that dominates business models and the way that a lot of people think, is wrong, and that we don't need that. We need kind of stakeholder engagement, stakeholder awareness, stakeholder capitalism, and a way of rethinking the way that we do business. And so your shareholder is no longer your primary driver. And the reason why it thinks that, and the reason why B-Lab is doing lots of different things, and it is because it wants to change the economic system. It wants to prove that you can do things differently. And I believe in that. And we spent 6.5 years for the time that I was at B-Lab growing a community, building a movement, and amazing business leaders, founders, engaging in things and doing things differently that felt like we had momentum. We were creating change. Businesses was listening, society was changing, and it was great, right? All through kind of the COVID pandemic, there was a huge boom in businesses thinking about this, having the opportunity to think about this. And I left B-Lab at the end of 2021. I felt that we had done a huge amount of work, and I believe in the idea and the concept of founders being able to create change. But actually, if you really think about it, the economic system is driven by finance, right? And finance and investment. And if you really believe that you need to change a system, you have to understand the system. And if the system is based on shareholder primacy, short-termism, the belief that the sole purpose of your business is to return profits to your shareholders, how do you create change really and truly of an economic system that is driven by this narrow narrative? And so I worked for a real estate investment manager, so not quite kind of on the harsher side of finance. I don't think I could handle that. But what I wanted to do is understand how you can influence change and what are the drivers for change within a business that is driven by returning profits. In my role in the organization I work in at Nucor Capital, it's about returning profits to our investors, right? Returns to our investors. We are actually independent. We don't have shareholders in our own business, which allows us a huge amount of freedom. And I think that's the interesting tension that I reflect on when we think about the world of the finance and investment. So listed companies are a real challenge, right? So you've got their sole purpose, they've converted or set up or listed, their quarterly reports, quarterly returns, CEOs are hired and fired based on their returns, and projects and programs are set up based on kind of how they can deliver short-term returns. And I think that's inherently a challenge. So you've got an inherent challenge of listed companies of quarterly returns. You've got shareholders that used to hold stocks and shares for 5 years back in the 1970s. So enough time to see a business go through a few iterations to deliver on things. Now you've got kind of 7 months is the average hold. So a complete shift in the understanding of how shareholders work and the ability to move money based on really short work. So it makes it incredibly difficult to invest for the long term. And then you've got CEO tenures, which have also changed. And this is a stat that I haven't fully checked out, but 39% of the CEOs of the S&P 500 last between 1 and 5 years. So there's no long-termism, there's no ultimate vision. Now, this is for listed businesses. I think there's an inherent challenge in the finance industry for listed businesses, but they're not the kind of the be-all and end-all, but they are a huge driver in how we do things. And I echo Matt's comments, which I think regulation, questioning disclosures with a lot of this stuff. We need to think about the way businesses operate. We need to hold them to account. We need to be active, engaged employees, but we also need to be active shareholders. And that's really key. And then maybe just taking that a step further when it comes to kind of people and project managers and citizens is we also all have pensions. So we all need to know where our pensions are invested. We all need to think about that. We need to ask our workplaces where our pensions are invested. And if you don't know much or haven't thought about your pensions, think about Make My Money Matter, which is set up by Richard Curtis, who is very famous for Notting Hill and Love Actually and all those amazing films. But he's kind of shifted his intentions a little bit around encouraging us as employees to think about where we invest, and our investments are our pensions, in addition to maybe any other investments that you have as well. So that's really key, and that all ladders up to investments and to the way that we change the system. So that's one thing that I think there's a little bit of a shift on what we can do more. Layering onto that is banking, how you bank, what you're doing. Again, the finance system is really important. A lot of people are choosing to fund fossil fuels and subsidies, which Sam mentioned earlier. How do we engage with our banks and encourage them to change or shift our money into the banks that actually don't do that? And I think that's fundamental as well. And then kind of the two other levels that to make sure I don't repeat anything that Matt said, because lots about TCFD. The other thing, maybe then just to touch on actually from regulation perspective, is SDR and the FCA bringing in kind of a labelling of funds and greenwashing, which is going to be really important. That's been delayed, frustratingly, but that's going to be really key for those who are investing to understand where their money is invested and what the purpose of that fund or that investment is doing. So is it to transition I'm 5 in the evening, I'm all up in my feelings. You call your phone. Yeah. Oh. Okay. Not sure. I hope that wasn't me. I wasn't doing anything, but hopefully I'm back. But yes, so kind of two things. So SDR, really important. Upcoming, we'll find a little bit more about that, but that's going to be a really key way for an investment to understand where you're investing and what the intention is. The second is be engaged in your business, ask questions, support them. But the biggest asset that businesses have, whether it's people and especially project managers who are able to deliver the stuff, which is really fundamental. So fundamental action for everyone is just to be engaged and talk to your business leaders about what they're doing and to use your influence that you have. And then the final one is that we're all citizens. We all have the ability to stand up to the whatever. I suppose everyone's global, so if I talk specifically to the UK perspective, or anyone who lives in a democracy, of voting in the right kind of people that you want to see in power, but also protesting if that's in your ability, or signing letters and protests, which I think are fundamental, petitions. Or you could, as Sam mentioned, Business Declares. I'm one of the co-founders of Business Declares. So, or queuing potentially to demonstrate in a very safe environment that you want climate action and you are a business person, and we can maybe touch on that a little bit later, but I'll stop there.
Awesome. Kate, thank you so much. Once again, if I don't see hands up from the panelists, we've got time maybe for one question, which I will ask. But Aidan's got his hand up. Aidan, go for it.
I don't know whether it's actually more to Kate or to Matt, but it's essentially around the idea that, Matt Carney, I think, put forward a couple of years ago in terms of regulation of the informal carbon markets. And I know it kind of didn't get through anywhere in Glasgow, and if there's been movement in that over the last 2 years.
I think there's a lot of movement on the informal carbon movement, but maybe I'll let Matt, you unmuted, so I'll let you take it.
Well, what I was going to say was that I think there hasn't been much movement. I think it's a real problem, because I think the informality is now casting quite a long shadow over some of the carbon markets, which isn't helpful at all. And I think legislation, regulation is a bit of a double-edged sword, but at least it makes the ground clear for people broadly to know what they're dealing with. And I think one of the greatest challenges we've got now is that we're being led down particular paths on particular things, as legislation, regulation, reporting would demand us to, and that is distracting us from almost anything else, actually. And speaking as somebody who has to do the reporting, it would be very easy for my life to be completely governed by what people expect of me in terms of numbers, statements, assurance, rather than actually what I might want to do. So I do think there's a real urgent need to formalise some of these things, because otherwise they'll be at the side of the desk. And at the moment, the focus is solely on what is mandated, what is required, what you're reporting, what counts, actually, which isn't satisfactory. But that's the way it is. So no, and I think one of the things that, COP and related things, they have to get a grasp really of understanding the impact of some of this stuff, because it is influencing hugely how businesses prioritize.
Yeah, and just to add that, 4 weeks ago, I think we had the first African Climate Summit. It was a prelude to COP, to get the sort of ducks in a row. And Aidan, that was one of, I think there were 5 sort of key asks. And one of the key asks was progress on those international markets, which will enable them to tap into carbon credits effectively. So without a scaled market, which is efficient and effective and invested in, they don't think they're going to be able to fund what they want to do.
Yeah, just to echo that, the price of carbon is essential. I have recently read that Canada does have something going, which is also quite interesting. So there are some countries who are looking at this, but it needs to scale. And we need to get international cooperation, because you can't have one country doing anything. But I think it's not just Canada. There are a couple of other countries. But yeah.
And Canada, they're doing it in a very smart way. They don't call it a carbon tax. They call it a pollution charge. So it's all about the way you frame these things to make them acceptable to people.
For sure. I think language and words, actually, that's one thing I was going to think about, is so important when we come to a lot of this stuff. I don't know if any questions about that, but what we use and how we engage and the way that we frame things are fundamental to engaging people.
Okay, so maybe we can explore that a little bit later, but let's hear from Aidan, and then we'll move on to our sort of scaling question.
Thanks, Sam. In terms of dealing with everyone else, I asked a few minutes on the built environment essentially, and in honor of it being a PMI, I will try and stick to my time, which is something construction is not necessarily very known for. If you're looking like as the precursor to this in terms of what we've been looking at on a global scale, as Sam alluded to, if you're looking at all the national targets, we're still looking at something like 2.4 to 2.8 degrees Celsius rise above pre-industrial levels. And that is if all those national declared contributions are actually hit, which when you look into the detail of somebody, and I know the UK best, you look at the UK's numbers, a lot of them are underfunded or like kind of fanciful even by the independent reports that are done on them of the government. So whilst I was listening to some science on it yesterday, and whilst it is technically feasible or technically possible to hit 1.5 degrees Celsius, I think most of the scientists are certainly in private thinking that realistically even 2 degrees Celsius becomes a very hard ask. So when you look at construction in the built environment, 38% of the global emissions come from construction itself and then the running of those buildings. But that doesn't even allow for the effect that construction then has on transport. In terms of how you design your cities, in terms of how everything is laid out, 23% of it also comes from transport. So there's a huge impact from construction, and unfortunately, it's a real laggard. If you're looking at globally, there is a city the size of Paris built every week. One of the largest cities in Western Europe. That's the scale. So what you should really be doing is building less. So you look at how construction can have the best impact, and it would be to build nothing. And then, okay, use less, build it cleverer, be more efficient. But the problem is, at the moment, really, when you look at a global scale, it's the differential between the global north, and the global south. So actually, you've still got 2 billion people without safe drinking water. You've still got 1.6 billion people living in slums. So it's very easy to focus on, sat here in a desk in London, it's very easy to focus upon how the developed world can change. But actually, what's absolutely instrumental, and certainly from a large scale project PMI point of view, is these huge infrastructure projects that actually have to start coming through. So if you take a look at something like sanitation, of the 169 targets, sustainability, global development targets, 130 are improved by the building of sanitation. But that will obviously have a negative impact upon the CO2 that actually is being given out on a certain level. So really, it's what is the difference and what should things be happening in the developing world, and it's all about mitigation. So in the last COP, there was a fund put together on loss and essentially for the loss fund for how the rich global north should help fund the global south. And it's, I mean, in Bonn, for SB 58, so Bonn about 4 months ago, they're trying to bash out these targets for how much money will actually be delivered. But that's where really construction is mitigation against sea level rise, is mitigation against further desertification, against drought. So if you're looking at sub-Saharan Africa, it's the growth of Sahara, the droughts that we're seeing all across the Middle East, sea level rise, the floods that we had this year all across North Africa, again, Pakistan. I think at one point a third of Pakistan was underwater. We talked about, briefly chatted upon actually very interestingly by Chris, hurricanes, so how that can be mitigated. I think he was talking about Bahamas, but also like cyclones across the Pacific Islands. And then there's the fact that infrastructure that already exists can be constantly destroyed. The health impacts of climate change. So how do we go about that? And then you've got the not insignificant fires, mudslides, and floods. So really, when I sit here and think about construction, I normally think about the buildings I see going up in the Western world, in the global north, the skyscrapers going up, the big glass buildings. And so my initial thinking is, okay, well, how do we make those more efficient? So that also has an impact. But again, when you talk about construction, and again, I apologise for the preference for the UK, but I just know it better. Essentially, carbon dioxide emissions of the UK, which have been broadly going down a little bit since Kyoto, certainly in terms of intensity. In construction, they've gone up. So in 1990, it was at 5.7 million tons, whereas by 2021, it's at 10 million tons. So you're looking at almost doubling in the past 30 years at a time when the science has been telling everyone it has to be going down. So there's lots of reasons in construction to have doom and gloom, unfortunately. It's sometimes hard to pick out the positives in an industry that has such small profit margins and is driven so heavily by profit. There's a traditional triangle in construction or a built environment where you look at how long something's going to take, your time, cost, and quality. And what I think people are really wanting to have is how you build environmental into that. So how can you make that triangle a square? But the reality is in construction, it requires legislation. In an industry that has such small profit margins and has so many players, then unfortunately, it does require legislation. And when you look at the legislation coming through, because we have a profit motive, there has been some improvement or some quite good improvement in the carbon intensity of actually running a building. A lot of that realistically has come from the work of energy, like it's come from the decarbonisation of the grid. So even if you're using the same level of electricity, you're using 60% less carbon, again, in a country like the UK, but similar globally where carbon intensity of electricity is gradually coming down. And then in the other things which won't even have time to touch upon, but in the developed world, huge amounts of work needs to go into retrofit. 50% of the buildings that are going to exist by 2050, there's huge already exist. So again, that's in the UK, but globally or developed world, retrofit is a huge issue in terms of a huge challenge. And actually, this one is an opportunity for how we can go about doing it. As I said, I was aiming to try and talk for only about 5 minutes. That will probably do.
Okay. Aidan, thank you. So we have a question here, which I think probably, so I suspect some form of construction is going to be part and parcel of almost every major project that's being carried out by the people who are listening to us. And so Adeyinka has said, and apologies Adeyinka if I'm mispronouncing your name, but just to paraphrase this question that you'll see in the chat there. So when there are these economic challenges, and of course, arguably there always are, particularly the rising inflation, cost of living, blah, blah, blah. How can the project management professionals who presumably quite often come in at the point where the project has been largely designed and you're being asked to implement it. So any suggestions to, how should they create the narrative? What's the business case? How can they almost sort of ensure, if they look at the project, it might be that there's tick, 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 because everybody's already thought about all of these things and they're just implementing, but they're probably not. So any advice for these project management professionals when they, I feel like, go back to the commissioner or the designer or whoever it is who set up the project to sort of say, well, what about A, B, and C, particularly with regards to infrastructure?
Okay, I mean, I'll take that first. I think it was addressed to me. It's an incredibly important question, and it's like, thank you very much for actually raising it, because I'm a huge fan of the personal advocacy. So whilst of course you can, like myself, or you'll rail against the lack of legislation, individuals can push change. And if you are the person who's the project manager and you're simply asking the questions of others, it raises the awareness. Like you yourself might not have the final cost budget, you might not be the person who makes the final decision, but advocacy is important. And the other thing within big corporations is actually in the race for talent. One of the things that no one has mentioned now, actually Kate probably did in terms of B Corp, so apologies, but is people are beginning to want to work for organizations that they feel make a difference. And Chris touched upon it as well. And if you can be seen to be pushing that, sometimes actually just saying that I'm not happy with how we're doing this makes people think that it's important. That's my 2 cents of this.
And Chris, do you want to go first? Go on.
Oh, sure. Yeah. Okay. Well, just my 2 cents is I was talking to a major aggregates manufacturer a week or so ago, and there was a conflict that was happening between well-meaning people in the boards and shareholders who were pushing towards some relatively aggressive decarbonization tactics strategies, and then the customers who were saying, well, this if this is going to be charging us an extra, couple of pounds on our tons of cement, then we don't really want it. We prefer to stick to this. Our margins are tight enough. So that's really the kind of the question for you, Aidan. How do you see that evolving, where you've got a block of people who really care, but in such a tight margin business, how do you square that circle?
It actually varies by company. So again, and I apologise, I'll talk much more from a UK perspective, because you'll see some of the large construction companies in the UK actually care, and they ask the questions, and you can see that they're making an effort, and others are not. But there's only so far you can push, as you say, in something like aggregate or concrete or cement, or even the steels, like if you want to use green steels and green aluminium where stuff costs more. There's only so far you can push in an industry that's making 2 or 3%. So unfortunately, it normally comes down to legislation. It comes down to, can we start tracking embodied carbon? At 50% of buildings now, 50% of the entire life cycle of a building built in the UK now comes from the embodied carbon, as opposed to its 60 years of life. And that's front loaded, which from a sustainability point of view means it's even more impactful on the reinforcement loops that you're going to see on a global scale. Unfortunately, even the legislation that's currently being proposed in the UK doesn't even touch on it. And that's a developed world country. So I can't even imagine what legislation on construction looks like somewhere like Liberia or Cote d'Ivoire.
Yeah. So
Matt, did you want to come in there, Matt?
Yes, briefly. Thank you, Sam. I was just going to say, I think there's a bit of a sort of future-proofing piece there, where I think PMs can have a particular role to play, which is, we've spoken briefly about carbon tax, legislation around circularity. There's plenty of stuff to come that's likely to make it more costly and more cumbersome to run a business if you haven't thought about these things in advance. So if I were project managing something now, I'd be talking to those around me about, have you thought about the implications of this in 3 years' time, in 5 years' time? How about we do it differently now to avoid the problem and potential charges and costs, not to mention the reputational damage in 3 or 5 years hence. So I think designing sustainability into projects now is an absolute must. There's a cost downside, arguably, but I think the potential cost downside down the line is likely to be significantly greater, because I think the direction of travel, unfortunately, in some ways, is more legislation and slightly more costly business if you're doing business poorly in a sustainability sense.
Okay, and Fernando Escobar makes a very good point. It's not a question, it's a point, but is basically saying that, project management, one of the key roles of project management is obviously to create efficiency and effectiveness. And so that obviously means less, in the grand scheme of things, less resources used than you would have used otherwise if you hadn't applied your excellence in your role, which of course leads on to contributing to a number of different types of SDGs. So, less materials, typically less energy usage, typically lower emissions. Just one example. So, Fernando, I think you make a very good point there, which that is an opportunity, that sort of efficiency aim, or the efficiency, narrative is a good one and in line with sustainability. What we just need to be careful about at a system level is efficiency gains very often get swallowed up by greater volume. So people create the efficiency, they save money, and then they invest that money in greater volume, and then you lose the gains. That's not probably the concern of the project manager. That is the problem, the concern perhaps of the business owner, and certainly of the system. But a great point. Okay, so now we sort of touched on a few of these things already, but what we wanted to do is just sort of call out that question of how to scale. So I think, obviously we've heard about renewables. We talked about some of the barriers, certainly, Chris. So maybe removing some of those barriers are critical to pushing forward. Matt, upbeat around the opportunity or the role of legal organizations and the law to actually accelerate this. So again, how can we think about that and how can we accelerate it further? Kate, again, I thought, relatively upbeat around finance. And I think for me, the big challenge about sort of accelerating the role of finance is how do we make finance and the finance industry closer to end use? So your organization is focused on delivering capital to achieve an outcome. Too much of finance is just intent on, doing something like day trading to deliver a financial outcome, not a real world outcome. So again, there's a scaling question about, how can we utilize those funds, redesign the financial system? What do we need to do? And Aidan, of course, you've touched on this. You didn't mention, or maybe you touched on it, but the incredible expectation of urban growth. So on the African continent, you've got significant levels of population growth, but then you've got much higher rates on top of that of then urban migration, in part created by climate change. So huge issues. And I guess, again, to the scaling point, this is urgent for the reason of climate change and emissions, but it's also, facing significant barriers that we've touched on. So the question is scalability. What are we going to, you've got the magic wand. What are we going to plump for to really scale this? The good things that we've heard about.
Well, yeah, I'll kick off. Okay. Well, you were absolutely right at the beginning, Sam, in calling out the general levels of awareness within industry, within business about climate. But just because that is a celebration, that's something we should be positive about. But just because businesses are aware of these things doesn't necessarily mean that they're doing anywhere near enough about it. So the question really is, how do we put a rocket underneath the private sector, try and kind of move us forward? Now, the first thing business needs to do is walk its talk. So while no CEO out there will say they're not interested in being Paris compliant, even the oil and gas industry are saying, we want to be Paris compliant. And a study just a couple of years ago I know you were quoting some slightly different numbers, but I saw a study quite recently that put the number of big companies whose emissions were actually Paris compliant at about 20%. Now that means 80% weren't. And similarly, no CEO will say that they don't want to help the world to meet its SDGs. So one more study, it says, if I can throw it out, from PwC, found that while 3/4 of the companies out there they looked at mentioned the SDGs, only 1/4 actually included them in a part of their strategy and or had any meaningful KPIs in around them. So how do we resolve the contradiction? And what I would think, and I think we've kind of nudged towards it in the conversation, is you try and make sustainability part of your competitive advantage. And I think that's actually a bit misleading, because true sustainability is already at the core of long-term business success, unless you're figuring out, unless you're trying to plan for tomorrow and the day after, and being around for the long term. Well, you're just ultimately unsustainable businesses will die out by the hand of the market. That's just inevitable. But we don't have the time to wait to be shaken for that to be shaken out naturally. So the answer again is policy. And the answer again is to be looking at the point on that you mentioned earlier on about subsidies. If we could be moving those to one side, and something else, just to kind of emphasize a point Matt made. There's a really important part for the writing of law, regulations, and what's coming in is a big wave of climate litigation. Like we saw just a couple of weeks ago, one of the big, correct me if I've got the name wrong here, Matt, but Granary, a large US hedge fund, just put in over $550 million into a UK law firm to go and take out climate litigation. And that's just another example of regulation encouraging hedge funds to step in, making investments, which then encourages law firms to go and to be pursuing bad actors within this field. So that's a kind of a nice melding of financial services, of law, of litigation, of legislation, to be trying to be moving ourselves towards a kind of a positive climate action. So more of that, please. But so to roll around, we need businesses to be walking their own walk, encouraging politicians to be pulling back on subsidies, and to be writing the legislation that allows for these type of bad actors to be held to account.
Can I follow on with that, Sam? That's all right.
Please.
I think if you need any evidence that this agenda is not going away, look at the amount of money that private equity is putting into all sorts of strands of sustainability at the moment, because there's a vast amount of money going into reporting, measurement industries, litigation, as Chris said, other things. So if they know what they're doing, this isn't going away. I mean, I just want to say from a sort of much more, from a pragmatic, not much more, sorry, Chris, a pragmatic level, I think one of the things that particularly the sort of audience like this can do is take a look at the value chain when you're working with your value chain. You know, by definition, these sorts of events attract people who sort of get it already. And most of my conversation I have with people who get it already. And in a sense, there's an ecosystem of businesses who are sort of doing all of this for one another. We all get it. We're all moving along. Picking up Sam's point, there's another half of business and organizations outside who seem not to be in the game at the moment and getting away with it. And the more that all of us down our value, you know, when you're challenging suppliers, asking tough questions to suppliers, when you're going back to your clients, the more of us, and I think particularly in the project space, being demanding of your supply chain and getting them to get this right and fold it into the way they do work. You know, as I mentioned, the future proofing, there is a future proofing part to it. It's a good business sense. You are helping them get ready for what is pretty inevitable down the line, either client demand or legislation. But I do think the opportunity is there to talk to people who don't get it already and trying to get them more on side, because you may be one voice today, there may be another one tomorrow, there may be 6 next week, then they will sort of get it, because we're only going to tackle this properly if we draw more people into the tent, because there is a bit of an echo chamber at the moment. My reductions help, your reductions help, somebody else's reductions, we're counting that number 3 times, we all go away happy. It's not making an absolute dent in the numbers of the half, as Sam has identified, of businesses, and that's just in the upper echelons, let alone elsewhere, who aren't really pulling their weight at all. So I think there's a real strong role for those managing projects to push this down the line, particularly in places where it hasn't yet reached.
Yeah, and just to echo that, Matt, actually, because I think the rise of populism all over the world, if we're alluding to kind of the broader shifts that are happening and the pushback that's happening, actually inviting people in to join us is going to be fundamental to the success of this. The headwinds are brilliant. There is a huge amount of engagement, but there's also a huge amount of pushback that's growing, and we can see that from the UK government and Rishi Sunak just a couple of weeks ago. And I think, to your point, that engagement and that power, my favorite quote in the world is by Margaret Mead, who says, never doubt that you can never doubt that a small group of thoughtful, committed citizens can change the world. In fact, it's the only thing that ever has done. And I think that idea, we literally yesterday started a tenant survey asking people about sustainability and asking people and tenants about what they're doing, and same with your supply chain and your value chain, like keeping that going down, keeping that pressure on. That's a huge amount of power to engage people and bring them in. And if people aren't doing it, that's even more insightful of how do you get to know them better and understand what's stopping them or what's preventing them, because it's up to all of us to create that change when there's a huge rising tide of people who don't understand or don't get it, or for other reasons can't engage with it, and that's going to be so fundamental to the future.
If I could just bring in, so Ricardo, you can read his comment in the comments bit. So I think this brings to mind, innovation, but also drawing the line around sort of sectors' responsibilities and roles in a slightly different way from the way that they're currently configured. So Ricardo's point is floods. You could talk about any of the other challenges that come from climate change, but we're talking about floods. So, create huge risks. They're more frequent, they're more severe, they create huge amounts of damage. The government spends, insufficient amounts to create the adaptation to stop them, then pays out all sorts of people, suffer and pay out as a result, and, it has an economic hit locally, et cetera, et cetera. So surely, we've got the wherewithal to look forward, to do some quantification of those costs, to think about how we might mitigate them and spend that money appropriately, both on the mitigation of emissions, but also the adaptation and the resilience more locally. And just a couple of thoughts, Ricardo. So first of all, I think it's an excellent point. You would hope that, for instance, the global insurance industry might step forward for that, let alone the governments. Unfortunately, neither really seem to be grasping the bull by the horns. One of the issues is that the mitigation of emissions, of course, has got global benefits And unfortunately, building out resilience and adaptation, which can actually increase mitigation, is a local issue. So we do have that sort of challenge between, global warming writ large caused by emissions, which emissions go up from somewhere in the world and then it impacts everybody, to where the intemperate weather affects people, which is local. So there is a bit of a mismatch. But again, it's not beyond the, as long as you've got a broad enough portfolio and enough scope, we should be able to resolve that. So any reflections on that? It doesn't have to be floods, it could be anything else, but it's a great point.
There's sorry, Chris. There's just quickly a less specific comment, but there's a mechanism, development impact bonds, social impact bonds, that people might be familiar with, that is exactly that, but it hasn't necessarily been applied to climate change. And that they are complicated and they are challenging, and that's probably one of the reasons why they're not necessarily working. But that does exist from a social perspective of reoffending rates in the UK, or whether it's preventing type 2 diabetes. That is a mechanism that does exist, but I'm not aware of it being applied from a climate change perspective. But maybe, I don't know, Chris, you might know better.
Yeah. So this is something that absolutely needs to be moving up the political agenda. It's a very, very good point. Ultimately, insurance companies are withdrawing. They're withdrawing at a ferocious rate. Florida is, you can no longer get insurance, property, residential insurance in large parts of Florida because of floods. Athens, you can't be because of wildfires. Big parts of the world, the insurance market is just leaving. So that means that when floods and wildfires hit these areas, it's up to governments to be trying to solve this problem. This needs to be something, it is a local issue, as you say, Sam, but something that needs to be on government's radars, that says we need to be looking at these things, because ultimately the responsibility will fall back on us. And it's an awful lot cheaper to be trying to fix it in advance, trying to put up these mitigation strategies, trying to put up these defense wall strategies, rather than bailing everybody out once these things happen, because insurance companies aren't going to be there. It's very, very good points, and it's something that needs to be much higher up the agenda.
Yeah, Ricardo, thank you for that. So before we move on to our final section, anybody got any other reflections on scalability? I mean, just a list. I think we've talked about, so language and advocacy, Aidan, you talked about. I think that's something that every single one of us needs to take on board. That requires probably for every one of us as well some level of education and awareness, over and above our current state. So we're up on it. The regulation and risk element, Matt, that you talked about, certainly being aware of that as an accelerator, very, very important, and bringing that to the attention of anybody of the projects you're running. The business case has come up a number of times, so driving this into the heart of the business and making a business case for it as loudly as possible. Innovation, we've just touched on that sort of at a systemic level, but probably at a business level as well. And then this sort of recurrent theme throughout, and Proceda, and again, apologies for mispronouncing your name, talks about medium and long-term considerations. So I think time and time again, we live in this short-term world, whether it's financial returns or it's insurance contracts or whatever else, and that is stopping us think on a proper basis, both for ourselves as we go forward and, of course, future generations. So this point about longer-term thinking is crucial as well. I see Stuart has just popped up. So yes, Stuart, what I'd like to do just before we close, if we could just go around.
You've got 2 minutes before we have to close, I'm afraid. So
only got 2 minutes. Okay, very quickly, one or two words from each, one or two words of hope. So we'll go Matt, Kate, Aidan, Chris. Okay.
Thank you. So for me then, as a comment about government in there, I think it's difficult for government to do it on their own. They've got one hand tied behind the back, other priorities, not enough money. I think businesses, individuals, we need to take charge ourselves. It is up to us. It's not easy, but within our day jobs, and I would say particularly in your day jobs, you can have an influence. And it's only by us all acting. Business has a big gap to fill, and it's only business that will fill the gap.
Am I next? Yes, probably. I'll go for it. Transparency, I think, is fundamental. The creativity that's coming with that, the understanding of where your money is, what you're doing, and that all leads to activism. So activism at home, activism in work, a way of engaging and being fully engaged. And that doesn't necessarily mean protesting in the street, but it means asking difficult questions throughout. And that's fundamental to creating change, on top of regulation, which is also so important.
Actually, Matt and Kate said what I wanted to say, so I'll save you some time. I agree, advocacy and political change.
Cool. Yes, sustainability needs to shift from a marketing function to a core strategic function. Governments need to be leveling the playing fields. But for all of the doom and gloom, I believe that we can do it and we will do it because there's no other choice. We have to. But I also believe that it'll be the most rewarding challenge all of us encounter in our careers, and we just need to get on with it.
Very good. And I think that, the number of people attending the summit is testament to that. And I think, getting people, building connections, getting people to talk to each other, then supports the sort of activity that Matt, Kate, and then Aidan are all voting for, and Chris, you're agreeing with as well. So thank you, everybody. Thank you, panelists. Fantastic insights. Thank you, everybody, for communicating and sending in your comments. And I hope we answered some of them. Stuart, back to you.
Great. Thanks very much, Sam. And thanks also to Chris, Matt, Kate, and Aidan for a fantastic panel session. Some really valuable insights there that I'm sure we can take away and digest and look back on over the recordings.